Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Tuesday morning, November 10th, 2020. Well, yesterday we had obviously the elections catalyst. We had the COVID catalyst from Pfizer. But, and I want to say this with a very big but, it was very hard to initiate new swing trade longs on some of these stocks that were up 10, 15, 20, almost even 30% overnight. Amazing if you were overnight. Congratulations. Awesome. But we did call for profit taking yesterday. We did call for sell the news, and we were looking more for cash flow trades yesterday. We were missing that optimal entry yesterday. We're still looking for that to happen in a few stocks today. I'm not throwing cold water on the rally. What I am is throwing reality from a trading perspective on the rally is where do you expect those stocks to be a few days from now in relation to potential profits, especially if you're a swing trader. That swing trading window is 3 to 10 days. So we got what we expected yesterday. A lot of stocks on the Dow specifically closed massively positive, but the SPY ETF closed on the lows. So we did get the profit taking that we were looking for yesterday. We're opening a little, excuse me, my knee hurts. We're actually trading neutral and not following through yet. We're not selling off hard, but we are not actually following through on that rally. So I'm not looking for necessarily a big decline, but what I am saying is get better entries. That's the big thing. And we're even seeing that in the boot camp a bit, where we have some really good traders coming through the community, starting the 30-day boot camp, understanding what it means to read order flow, understanding what it means to read the tape. Just a little bit anxious sometimes by chasing a scan or chasing price where stock's up too far and the reward potential doesn't make sense anymore. Yesterday was a great day for cash flow, though. There was volume, there was volatility, there was easy to pick which side of the market you were on. And today we're going to have some of the same. We do have a few trades, and specifically we're talking about the cruise line ships today. And is it the right time to start buying them? Now, very specific to say start buying them because it's one day. It's one day punching through those levels. And again, if you are an entrepreneur, if you're a business owner and your business doesn't have cash flow for months, you're not going to get that money back in one day. It doesn't work that way. You have to catch up, and get to the point where eventually you start managing it and you're like, okay, cool, we're back to normal. We're not out of it yet. Yesterday was an announcement. When it's not like all of a sudden everybody's just going to start going to cruise lines tomorrow, fill them up, and the coffers are going to fill up with money. I hope that happens, but we're traders here. Our job is to first manage risk in exchange for the potential. So the cruise lines that we're talking about, RCL, CCL, Royal Caribbean, start to look to build a position. We had a big conversation in yesterday morning's game plan is how far back has the smart money started to allocate capital to those ideas? Is it 1 day? Is it 2 days? Is it 2 weeks? Is it 2 months? How far back is it? That's going to dictate your conviction level. That's going to dictate how heavy you want to go in on your initial entries. We're going to take a look at a few of them. Absolutely consider looking to start building a position, but don't jump in head first. It's only the first day off of an amazing announcement, but the world hasn't changed yet. So be smart. Use your head and be smart. Start to allocate some shares, and then as you get feedback from the market, positively or negatively, you'll know how to learn to manage the trade. So let's let the market tell us what to do. Incredibly exciting. We're going to take a look at the charts and start to take a look. So you can see here the futures, -3, basically just floating around the zero line. Nothing really outstanding one way or the other. But we do want to take a look at RCL, Royal Caribbean. And you can see here that it was prior to the pandemic, let's just say right around 134, 135 in that area. So right now it's almost a 50% haircut. Right now it's almost 50% off of where they were. Now this is still a pretty incredible move. If you go all the way down here from 20 to 70 during that time period, they still actually held their own, which is really impressive. And you can see here in this particular case, 71, 72 in that area is the area that we had to get through. But again, we need follow through. We need confirmation. When real breakouts happen, they punch through and they stay there. So what we need to do is we need to see if you want to take a flyer or an initial, what we call first piece to get feedback to start building a position, 70 is your line in the sand. If you did not get involved yesterday, if you didn't start building a position yesterday, yesterday's high is the best entry right now, which is, that's going to create a $10 stop loss. That's a pretty big stop loss for this particular window here. So again, what does that mean? It means that if you miss the optimal entry, now again, just a week and a half ago, the stock was 50. So this is $30, basically $26 in a week. That's a big move. So we missed the optimal entry. So if you're late, but clear on the direction, you have to work the order in smaller pieces as you get feedback because of the risk as diminished, the reward has diminished and the risk has expanded with how far it's moved. So if you want to be a trader who makes consistent money, you have to learn how to adjust and manage your position up or down. I love the idea, not going with full size. So just have that thought process in mind. Same thing with Carnival, which is a little bit more reasonably priced. But again, all the same, 50 down to 8, same kind of numbers, right? Charts basically look the same. So either one of those, whichever one you're going to get involved with, if you're going to get involved in it, work the orders because we missed the optimal entry. A couple of earnings calls out today: Rocket Mortgage, Datadog, and Lyft. Lyft is actually an interesting one. One of the stocks I will be short selling today, looking for follow through. For those of you that don't normally trade Beyond Meat, it's in my list every day. This stock trades really, really well when there's good news and just gets absolutely clobbered when there isn't good news. Just to give you an idea of what it's like during the day, they had good news, bad news, and then good news. McDonald's actually announced that they're going to start using it. And then you have earnings, which came out after hours. It's down $26, 17% as of right now. The stock is all over the place. But if you understand tape reading, it's going to be an amazing stock to get involved with during the day as an active trader. Some other stocks that we're looking for where the optimal entry has not really gone that far, EXPE. So now we have clearly yesterday's trading range. Again, we could use the same way we just talked about building and working that position. SPG, not a stock that normally comes up on my list, but 72.50 was the level I was looking for it to take out. Finally punched through that level yesterday as well. Now, WYND is one that I want to talk about that it did not have obvious order flow, has not had obvious order flow really since the pandemic started. You can see 88 has been a big level for me right now since going back to April. And yesterday it just exploded, imploded, I guess, if it goes to the upside, right? Imploded. Which one is it? I don't even know. It doesn't matter. I'm going to be looking to trade it for cash flow. And this is getting back to the argument that I just said before. How long has the smart money been allocating money to confirm your bias? And in this case, only a few days. However, the stock meets all of my criteria of volatility, volume, profit potential. But you can see here now 108 is a resistance level. So I'm only going to be looking to day trade this stock, but I will be active in this stock today. Then we have the financials, which are very interesting and kind of building the same exact argument where there was really very little order flow, very little clear institutional buying, very little smart money activity where you could say, wow, they're really building a position in that. We have AXP, JP Morgan, which JP Morgan 104. I've been watching that level for a long, long time. Goldman Sachs at 215. All of them hovering right around those levels at slight breakouts. So what are we looking for? For cash flow, I'm looking to actively day trade them as long as they meet my criteria. For longer term positions, now I'm looking for those stocks to go well bid and stay above those levels to start building a position. Disney is another one where, again, get out of the house stocks versus the stay at home stocks. These get out of the house stocks are getting amazing follow through. Trading kind of neutral today, which kind of validates what we're saying. You're just not going to jump into these positions. You need to find the optimal spot. We've missed the optimal spot because the stock has already gone 117 to 140 to 750. So roughly $30 again in just over a week. A monster move for Disney. We need to let it settle in. We need to give it a better entry price and set on a reward potential. But what we're trying to do here is set ideas up for longer term plays based on the world changing. And it's important that you're in the right stocks when the story changes. That's a big part of trading. Play Dave & Buster's is another one. You can see $20 was a big level. Now we need to let it settle in and look for a new level. So you can see basically the pre-pandemic levels are where we're looking at. And finally, Prudential is the last one that's going to be on my list for a potential longer term play. Good example here where it got up to the level, did not punch through the level. So now I'm looking for it to go well bid through 73. So really what it comes down to right now is, as we said yesterday, you can go to the videotape. We were looking for amazing day. We were looking for cash flow, but we were also looking for profit taking. We were not looking to initiate new swing trades through those levels. Now, hopefully today we'll pause a little bit. It'll give us a better spot to manage risk, clear entry signals, and then probably look for a new swing trade. If I had to If I was forced to give an idea of what I expected to happen throughout today, I actually expect we're going to trade lower today because yesterday was so euphoric. The market needs to absorb it, get all the news back in. It's exciting. I mean, who doesn't want the world to get back to normal? I'm not saying anything along those lines. I can't wait to get out of the house, go out to dinner, do something, go to the gym. But it's only one day. So what I'm really, the core of what today's video is all about and today's stock picks are all about, I'm still trading for cash flow because these percentage moves were too far, too fast. Amazing news, happy news, too far, too fast to justify new reward potential. So we're probably going to get a little bit of profit taking, probably see the stock settle in a little bit. The news will play out a little bit more about the vaccine news. And then we could look to hop on board the right stocks that were negatively affected and look for some stocks to buy that, and a bunch of the ones we just mentioned. Now, the other side of the market is if you're a short seller, you can actually end up starting to look at some of the stocks that are getting crushed and probably will continue to get crushed because the whole reason they went up, that catalyst has now changed. So we're talking about Zoom, OSTK, Wayfair, stocks like that are now on the other side of the story and are probably going to see some selling over the next few days. So there's a lot to do. I'm personally in a cash flow mode right now. I think it's exciting as anything that we are potentially seeing a solution to what's going on. And that could just really, really make for an amazing end of the year and probably the next year, quite honestly, as everybody has this fever to get back to normal. So biggest lesson from today, the biggest takeaway from today, we talked about which stocks to pay attention to, start building those positions purposefully as opposed to jumping all in and having the fear of missing out. Because what's going to end up happening is if you take too much share size and the news story settles down a little bit and these stocks start to drift lower, you're going to end up getting stopped out of a good idea because you had too much share size. So be smart with your position management. Don't worry about fear of missing out. If this thing has legs, we're going to have a lot more room to go to the upside. Have a great day, everyone.